Hi, I'm joined today by Neal Brady, CEO of Eris Exchange. Neal, it's great to have you back on the TabbForum.
Great to be here.
We just published a big report on buy-side swaps trading and looked at what 2013 meant, and that was the big resounding message was that it was the year of compliance. But we think that 2014 will be the year of competition. What do you think is going to happen in 2014 vis-a-vis swaps, swap futures, and the competitive landscape for trading?
Yeah, we definitely agree. We think this year was the market was focused on complying. Next year will be the focus on optimization. And in that picture, people are looking at various swap alternatives, various execution venues, and various different swap futures contracts. There's a deliverable swap future. You have the Eris version, which is a cash settled contract. For us, it's a great validation that swap futures are here to stay and are going to play a meaningful part of the market. We're spending less time educating people about swap futures themselves and more about the various specific features of our contract.
Yeah, you've been around for like 2-3 years, and now do you feel the world is sort of turning to your wisdom, that people are starting to get religion on swap futures, and that's why we're seeing all of these new types of swap futures products? Or do you see it as a competitive threat that other exchanges are coming up with their own flavors?
We see it as overall very much a positive for Eris. We think as people run into the realities of clearing and Dodd-Frank and various Volcker rules and leverage ratios, and now the mandate to execute on a SEF or DCM, the advantage of trading a swap in a future construct is becoming more apparent. Obviously, with success breeds competition or other people entering the field. We've always expected that, and we welcome that.
Okay, and what about so you're seeing volume growth? Your experiences in the run up to the trading mandate at the end of the year. Tell us a little bit about some of your successes.
Our open interest is up 250% year over year. We have new dealers joining the platform. Wells Fargo a couple weeks ago, a couple others. By the end of January, will have made first trades and will announce that they're providing liquidity. Our onboarding pipeline is growing. It's all driven by the trading mandate coming next year and also the looming European clearing mandates in 2015.
And I mean, liquidity begets liquidity. We know that well. And in the report that we've published, we were asking firms about, what are the types of new entrant platforms would they be interested to connect to? Yeah. And you were talking a little bit earlier about some of the dealers actually extending your ability for network or agency execution into the Eris Exchange. So tell us a little bit about how you see your ability to onboard clients in 2014.
Yeah, I mean, given that we're a futures contract in the futures market, it's the agency model. Mm-hmm. So firms like UBS, we're on their roadshow with them, the next couple of weeks.
Right.
These guys are really very vocal and upfront about offering clients the best execution across venues and saying, I will get you the best price, be it on a SEF, a particular SEF, on a futures contract, futures exchange with a given contract. I will give you the electronic tools to navigate that world. Our dealer might be on these platforms. They might not be. Our partners at Morgan Stanley have integrated us into their front-end execution system for clients. So we think that agency execution model is coming increasingly to the swap and SEF space, right. But it's a fundamental feature of the futures.
Right, it's a known.
It's a known, yeah.
Right.
We could have thousands of clients connecting, and we wouldn't even know the identity of the end user client through a given clearing broker, for example.
Got it. And do you see how do you perceive the dealer competitive landscape as well? Because that's another sort of dimension to it. Do you see, you mentioned UBS, we're on the roadshow. They have been pretty vocal in terms of pushing the envelope on this market and advocating introducing broker agency type models for swaps and swap futures. Do you see certain types of dealers going with that and others less so? How do you perceive that landscape?
I mean, every dealer is different. Every buy-side firm is different. It really is just their own strategic view of how much revenue can they make on the sort of commission charges from both execution and clearing, and some of the financing charges versus what they can make through other activities of sales and trading and you name it. Sort of mapping those variables against sort of a very dynamic landscape, but which is becoming clearer and clearer what the true costs are going to be in the sort of new swap market. And so I'd say every dealer sort of at a different stage and making different choices. We're obviously working with those that are sort of moving, further along the curve on the agency execution and sort of, futurized trading model.
So, I mean, I guess you've been around now for like 2-3 years. Mm-hmm. You've been seeing this whole market emerge. It seems that it's showtime now.
Yep.
And we've got competition between swaps and swap futures. We've got competition between swap futures and swap futures or futurized swaps. We've got competition in terms of types of dealers that are providing different methods of execution to their clients. Is there anything in 2014 that you think is the starting gun? Is there any particular event or date or something that you're on the lookout for that you think is really going to significantly be the kind of historical moment that people are going to look back on and say, that was when the race really began?
Yeah, I mean, I think it's clearly in the Dodd-Frank rollout. It's the first wave of that trading mandate, and that's not to say that everything migrates immediately that day to trading on a screen, or that there's a massive uptick in futurized swap volume in that day. But everything is being basically driven off of that the mandate to connect to an execution venue and trade certain types of products on a venue. We've seen our open interest go up 250% year over year. The number of firms we have in our onboarding pipeline has tripled. We have new dealer firms like Wells Fargo several weeks ago doing their first trade and being on the platform to make markets, and we have several other dealers also in that pipeline. I think it's definitely that trading mandate from the Dodd-Frank implementation, even if it is phased. The first day is that beginning starting gun, and then secondarily, but just as important, you have the sort of looming mandates coming for the European market. So we're targeting at this point, the early 2015, but sort of those two things in combination with all the other background issues of leverage ratios and Basel III, that also plays a part. But if you're looking to a starting gun, it would certainly be the trading mandate, and sort of always has been. Even looking back a year or so ago, I think that's really the key date on where we might see a real sort of change in the marketplace.
Okay, well, with that, we'll wish you luck, Neal. Good to see you as always.
Thank you.
I'm Will Rhode, Director of Fixed Income Research at TABB Group, and joined today by Neal Brady, CEO of Eris Exchange.